Thoughts are the electrical charge in the quantum field, and feelings produce a magnetic charge in the quantum field.
Yeah.
And how you think and how you feel broadcasts electromagnetic energy that influences every single atom in your life. The thought sends the signal out, and the feeling draws the experience back to you.
Yeah.
So then if the person is living in anger, impatience, resentment, frustration, and they're holding the intention of their future, that's mind and body in opposition. There's no vibrational match between anything in their future, because they're saying, why hasn't it happened?
Yeah.
And they're waiting for their healing to begin so that they feel gratitude. They're waiting for their success to feel abundance or empowerment. They're waiting for their new relationship to feel love. Well, that's the old model of reality of cause and effect, Newtonian physics.
Hello everyone, welcome back to my channel. In this video I will be implementing the candlestick price action technical analysis based on the concept of my ebook. You can see my ebook below on the description of this video. So this video will be contain 3 trades in around 20 minutes, and I will explain while the candlestick is running. So let's go. First of all, I have to see what is the market is doing. This is flat EMA. You see, that's mean in the major was the consolidation or a doji. So we see here ranging uptrend, downtrend, uptrend, downtrend. Maybe it's like a triangle, I don't know, but it's look something like that. It's getting tiny, and then break out. Okay, here I need to, I have to have, this is the best zoom level. Okay, 20 EMA was flat here, so we have to wait what is happening. And in this kind of condition I have to detect what is happening. First, here was a doji, breakout, fake breakout, okay, and then doji again. It's like a shooting star, but it's a doji. Okay, now it's breakout happen. You see, it's breakout now entering this level. Okay, so do you think the breakout will in a good way in this kind of market? I don't think so. So I will do a call now. Okay, call option. The entry was a little bit nice because the EMA is flat, so in my opinion the breakout will not happen. Sorry, the continuation after the breakout will not happen in this kind of condition, especially at the second deviation lower Bollinger Band. Also, this is flat. Okay, so I just based on the context. So that is my first trade. Doing trade is like tricky, so if we only depends on candlestick, we will be blind. Okay, the candlestick needs a comparison with the context. Okay, because if we are in a consolidation, if we are in a trend, if we are in the ranging, which is ranging also consolidation in a higher time frame, so that is why you see here the breakout is not working because of this context. Here you have to be careful. It can be bullish, it can be doji, and most of the worst case is bearish here when you think this is like an engulfing candle. Okay, so don't use any engulfing candle in this kind of situation because it has a 50-50 chance, which is gambling. I will most probably at the most specific area like second deviation, or even here if I see some confirmation at 1 deviation, because sometimes 1 deviation also can give me a clue. Okay, now it's like a good spot, like higher high, higher low. Do you think it will be work? No. I will do a put option here. Yes, the entry was very nice. Put option which higher high, higher low. I don't believe that will be broke here. Okay, because the context, again the context. Alright, so I explain it in my ebook that this probability will not working, this will not working. Okay, so it's just, my ebook is just a bunch of experience that you need to understand, because else you will gain your own experience from the scratch. Okay, so if you buy my ebook, you will not start from the scratch, and if not, then okay, it's very tiny. Okay, still in profit. Now is a put option. So you see, sometimes it's just like that. It's work basically, but I'm only profit by the safe entry point. The analysis was a little bit of miss. Okay, you see that, a little bit strong, but as in the context it will be down because it's flat. Okay, and if this was a trend, it will be bullish here, and this will be a strong bullish retracement. Okay, so here was also a mistake that this is very strong candlestick, so it can be bullish, doji, bearish. Okay, but here I'm with the context. Context was consolidation. So now what is happening? Should the price going down? We wait. Okay, wait always for the retracement in this kind of EMA, middle Bollinger Band, 20 EMA. Here middle Bollinger Band with it's similar with the 20 SMA, which is simple moving average. So I need to do my last trade. Okay, what is happening here? The problem now is it's look like a trend, right? Because first of all, my entry was a little bit fail here. It's only by the safe entry point, but the analysis was wrong. Alright, so what is the probability to going down again to break all EMAs, or it will be jumping up? That is the question. For me, I have to wait, guys, because I'm not sure with this one. This is look like bearish engulfing. Okay, but now the 20 EMA is like against this bearish engulfing. It's not aligned, so it will be confirmed by this candle. Okay, this candle has not to break one deviation upper Bollinger Band, so this kind of situation can apply in this kind of context. Okay, because now we also have to consider 20 EMA like this one. It's not make a bearish here, it's make a bullish, so this is also kind of trend happening there. And yeah, now I will put option. Of course I will do a put option now, because as I said, one deviation is not broken. That means price will go down, and most probably if you do a put option here, you will be trapped by this two candle retracement. Be careful of that. I'm also explained that on my ebook if you want to check it, but at the moment my ebook is only for the basic one. The advanced is still on progress and will be released when it's ready. Okay, let's see what happening in this kind of entry. I'm expect a bearish one here. I'm not expect a bullish one. Okay, that was my last trade, guys. So nice session. Okay, 3 in the money, and then the second one was a critical one, because you see it's a little bit 50-50 here. You see it's close at second deviation, and my brain thinking with this kind of context it will be bearish or retracement. All right, and then based on that, based on the context, I do a put option, but with the safe entry point here above, because yeah, sometimes it's like that. And then the next is bearish, you see, that's because of the context. But sometimes the market is playing itself, like making one retracement, making two retracement, making a small candle that's against our perception, and that is the problem. Okay, sometimes that is why the safe entry point is very important to support our probability for profit. Okay, because the doji in this kind of digital market, you see, this is the very high risk trading market, okay, or trading industry. Okay, so you need to very carefully. Okay, it's like do not enter with the doji. I mean, do not enter in the opening price itself, because it will a doji happen and we will lose. But in binary, if a doji happen and we can be like draw, okay, nothing is lost. But here is very tricky, but the percentage is always high. That is always that is why the percentage is always more high than 80%, because of the difficulty is also more high. The broker know this, and we also has to be smarter than not than the broker, than our, like, smarter to controlling our emotion. Okay, for example, like do not entering here, you have to enter here, something like that. Okay, so thank you guys, I hope you enjoy my video. Bye bye.